Good morning, master traders, money magnets, fellow sheeps. How you guys doing? I hope you guys are having a great morning. We made it another morning, guys. We've been blessed with another gift to exist and to witness this amazing price action that we've been having lately. We've been having some good volatility. Now, I'm still seeing signs of bearishness. However, the SPY, it closed, Wednesday's close was a little higher than Tuesday's close, but it's pretty much around the same area. After 4 red days in a row, not too surprising to see that the SPY cooled down a little bit on dropping. I mean, if we look intraday, we still had some nice volatility. This was yesterday's price action. And I wrote in my Discord here before the market opened. 596.5 is the equilibrium level. Below keeps yesterday's breakdown intact, making the PA overall bearish with 595 and 593.5 in play. And above, bulls need to recapture. If above, bulls need to recapture the 50 DMA. I'll trust the recapture if 598 and 600 can clear to put the higher targets in play. We look at the 15-minute chart. Remember, Unco watches the false breakout, the false breakdown, the regular breakouts, and the regular breakdowns. No lower than a 15-minute chart. You guys can see here, yesterday, the first breakout was the breakout of 596.5, which Unco alerted to the group. 596.5 cleared. It was a very nice pop to the upside, giving us a nice hit to 598, going as high as 599.5-ish, okay? Now, from there, that's when it got a bit choppy. Okay, we got a bit choppy. We were battling at the 50 daily moving average around that area, guys. We were battling there. And that's when I let the group know. Right now SPY is battling to either recapture the 50 DMA or back test it. Okay, if it truly recaptures, 600 must clear next to put 602 or higher in play. Trust no rejection unless 598 fails as support. We trust no rejection unless that rejection is strong enough to break down a support. And what happened? Well, it broke down 598 and it gave us a very, very beautiful move to the downside. Broke down 596.5, broke down 595, going as low as 592. We see that there was some good buying pressure from that 592-ish area before we get a little bounce. And now we look like we're gapping up a little bit here. Overall, looking at this price action for the last week, 4 to 5 trading days, it looks overall bearish still. There is a chance we could get some consolidation after 4 red days in a row. It's healthy to see we get some consolidation, maybe cool the RSI down a little bit. It's really oversold. Maybe it'll get it to go back out of oversold territory a little bit. But overall, to me, it's still overall bearish. The reason is we back tested that 50 DMA, the daily moving average. And there was selling pressure there. The market makers recognized that area and did not let the price go past it. We broke down the 50 DMA on February 24th. Back tested it yesterday on the 26th and got selling pressure. That's overall bearish price action. Okay? So, knowing this information, what do we do with it? We don't just use it and just blindly just stay bearish. Okay? We stay bearish as long as price can stay below that 50 daily moving average. And we'll look for bearish follow through if the next support levels at 596.5 and 595 can break down. What I'd really like to see, if you're a bear, is that 592 fib level. That's a fib level breakdown to put 590 and 588 or lower in play. But if we're talking about staying bearish, I need to see price stay below the 50 daily moving average. Okay, the 50 daily moving average is around 598.6-ish. So if you want to see some bullishness, if you want to see the bearishness turn to bullishness, a good start would be to recapture that level. For me to trust it, I need to see 598 and 600 recapture. We don't call bottoms here at Uncle Charters' YouTube channel. We call the traps. If we already get a bottom, usually like 100% of the time, when a bottom is put in to kickstart the bounce, a false breakdown setup starts. Okay? Not every false breakdown puts in a bottom, but every bottom started with a false breakdown. So if that's the case and we already get bullish, the 50 daily moving average needs to recapture. I want to see 598, 600, and the fib level around 602-ish recapture for me to even consider a bottom is in. All right. So above the 50, above 600, above 602, that's when Uncle would go back to being bullish. Overall, bearish still. Okay, and that's based on the price action and the context it's giving me. I'm always open to switch, okay, because I'm a sheep style trader. If the price action says bullish, I'll be bullish. If it says bearish, I'll stay bearish. Okay, so remember the plan today. We're just looking to react, know the levels, and whatever the setup give us, we react to the setups. So that means if 596.5 and 595 fails, I'm going to be looking to short with 592 or lower as my target. And I won't switch bullish or look for calls unless 598, 600, and 602 can recapture. Just like I show you guys on the 15-minute chart, I play it level to level. And if I try to go for the bigger move, I'll let my runners go for it. And then I'll leave a trailing stop loss, okay, and let the stop loss babysit the rest of the trade, okay. Triple Q, similar situation to the SPY. It closed just a little higher than the previous day's close. It's a sign of choppiness, okay. We had 4 days of drop in a row. I don't want to say choppiness, but consolidation, some type of pause, okay. But as of right now, I have support at 517 and the fib level at 515.4. I need to see those levels break down if Triple Q has plans to head down lower with 514, 512, 510, and 508.5. That's a fib level in play below. All right, look to react. Now, if the plan is to bounce, I need to see resistance at 519 and 520.3 clear. Give us that false breakdown setup. And then I would look to long. 525 would definitely be a target or higher. All right. If we're playing level to level, then above 520.3, 522, 523.5, and then 525. Above 525, I would feel more comfortable to say that maybe a bottom is actually in. Okay. And if the bottom is not in and we're heading down lower, like I said, 517. 515.4 and 514 must fail to put those lower targets in play. Now, while Triple Q and SPY showing signs of some choppiness and entering the chop phase, Tesla look like it's still in the trend phase. In this phase, it's bearish. Okay, bearish trend phase. Who knows where the bottom is? Sky's the limit, or in this case, hell's the limit. I don't know, however you want to look at it, but but like I said, we got to focus on the charts, whether, whatever you feel about the guy personally, let's focus on the charts. Let's focus on the money making opportunities. We are money magnets, not drama magnets, money magnets. Okay. So right now it's around 294.6-ish. Okay. I have support at 294 and 292. I would be very bearish below 292 and favor a lot more downside. Guys, focus on the charts. There's a lot of money to be made. To the upside, to the downside, doesn't matter. Okay, so if we break down these support levels, 294 and 292, we're likely heading down lower. 290, 288 or lower would be targets. It'd probably go lower. Now, if we are to go for a bounce or even pause this bearishness, we need to see some resistant levels clear, some recently lost levels recaptured. Okay, so right now I have resistance at 295.5, 297, and a fib level at 299. I need to see those levels recapture to consider more upside targets. Okay, 301, 302.5, a fib level at 304. What do I got? 306, 307.5, another fib level at 309, and possibly even higher than that. Okay, we had a strong rejection from that 309 fib level yesterday, so recapturing that level would definitely be a win. But we won't get there unless we can clear 297.5, the first fib level at 299, to even make it possible to go hit those levels. Otherwise, we break down more support levels, 294 and 292, we are likely heading down a lot lower. NVDA, after multiple days in a row of selling, it gave it a pause, went for a bounce yesterday. However, it did find some strong selling pressure from that fib level around 133.6-ish. Okay, so if we are to be bullish, I need to see that sell zone canceled. I need to see it change from a sell zone to a buy zone. So getting above 133.6 would definitely be a win for the bulls. Putting 135, 136.5, 138, and 140 in play. To break out this down trend line, NVDA would need to get above 141.5. That's a fib level, but it need to get above and break out that multi-month downtrend line to try to put a bottom in. Okay, can't get there unless we can clear 133.6 and 135 to start. All right, overall bearish below 133.6. Bearish follow through would be to break down some support levels. Started with 130. What do I have here? 131, 129.5. 127 and 125, all would be targets to the downside. Got to break down. It starts with the breakdown of that support level, or in this case, it did recapture that 131 level and at 129.5 level. So breaking back down those levels would cancel out the recapture and definitely switch me back to bearish on NVDA. All right. IWM looks like showing signs of choppiness as well after a strong move to the downside. Overall, though, it's trying to gap up, and I have a fib level at 217. It's above that. That will be a good start for the bulls if they can stay above 217 and turn it into a buy zone. Clearing 219 would definitely be a help. All right, that would definitely put 222, 225, and 226.4 all in play. But to get there, it would need to stay above 217 and clear 219. If we drop back below 217, 215 fib level would be in play. That was a strong buy zone this past week. So losing 215 on the daily chart would definitely be a big win for the bears and put those lower targets in play. 213, 211.8, and 210 would be the lower targets. Let's see. Apple finally with the pullback. Goodness, it was looking a bit weak when it was dropping up. The volatility was dropping. The candle size was dropping. It was looking tired. Now we finally got a nice healthy pullback here. Right now it's around 240.3. I have next support at 240 and 237, guys. If those levels fail, we are heading down lower. And below 237, that's a fib level. I would favor a top is in if that level fails again. All right, trust no bounce unless it can clear resistant level. All right, I have resistant level here at 241.5, 243, 245, and 247. Okay, got to get back above those levels, and there's a good chance we can, the next clearing or breakout of 247, it'll definitely hold. All right, the odds of it holding is a lot higher if it can start bouncing. Otherwise, if we lose 240 and 237, then a lot lower we are going. Amazon went for a little bounce here, but remember we had this multi-month orange downtrend line, broke that out recently with a breakaway gap. However, we had that false breakout setup where we broke back below that downtrend, and it led to a nice move to the downside. But look at here. We got a nice little bounce, and it back tested that trend line as of resistant. So despite the bounce, the overall price action is still bearish, but can it change intraday? Well, if Amazon can get above 218, then they're gonna recapture or re-break out this. Is that a real word? Re-break out? Anyways, Uncle making up words now. It'll break out again, once again, break out this downtrend line and give bulls some type of hope, some type of momentum. And it would put 220, 221.8, 223 plus all in play. But we need to clear 218, all right? If we are to get bearish, if this is just a back test of a critical level and more downside is the plan, stay below 218. If we break down 216, 216.2 and 215, we are heading down a lot lower. 213 or lower would be targets. We could head down to 210 or lower. It will be a nice move, but it will need to start with the breakdown of 216.2 and 215. Here is Microsoft. Microsoft is also chopping as well. If it really wants to go for a bounce and give us a higher bounce, next resistance is at 401.8 and 403. I need to see those levels clear to put 405 in play, 407, 409, and 410.7 in play. If it fails to clear 401.8, because that is a fib level, if that level defends as resistance and support at 400 fails, 398, 396.3, 395, and 393-ish would all be in play to the downside for Microsoft. Here is Meta going for a nice bounce yesterday, but can it continue with the bounce? I have next resistance at 683 and 684.5. If those levels clear, 686, 688, 689.3, and 671 plus would all be targets to the upside, but it'll need to clear. Like I said, 683 and 684.3, that's a fib level to trigger a move to the upside. If yes, it's just a dead cat bounce or we get a gap in crap, then once again, support levels must fail. All right, I have support at 681, 679, 677, fib level at 675. Those levels fail, we are dropping down lower, possibly all the way back down below 670. I have a fib level of 670, 667.6, and maybe even lower than that. All right, so watch those support levels that I just gave you. DXY looks like it wants to bounce, okay? And for me to really trust the bounce, I'm looking at this pivot high from Tuesday, 106.7, and in the fib level, we're close to 107, okay? I need to see those two levels clear for me to favor a bigger bounce for DXY, okay? Look, it could be a wedge over here, so clearing out those levels could be explosive to the upside. Otherwise, support is at 106.2. If we break down that level, then DXY is dropping lower, okay? Coin consolidating as well. We also have an inside candle setup, okay? So it's consolidating, seeing signs of chop. I mean, it was a beautiful, beautiful move to the downside. I hope you guys made a lot of money, okay? Take your family on vacation or something. But we got to get ready for the next setup, okay? And right now, Uncle Charters is trying to identify the chop range, okay, because it is an inside candle. So I'm looking at the mother candle's high here is around 222.8. I'll round that to 223. So if we are to be bullish, I need to see 223 clear. 224.3 would be in play, fib level. I have a gap around 227 plus. 230 would definitely be a target. So my recommendation is this. There's a resistance level also at 220. All right, support. So okay, so resistance at 220, 221.5, 223, 224.3. Gap fills around 227. Those are your resistance levels. Clear those resistance levels. 15, 30-minute chart or higher, whatever time frame you're comfortable with. That's what I use. 15, 30-minute or higher. Then maybe we can get a bounce. All right, above 222.3, I would definitely favor a higher bounce because based on this setup, that would be a bullish breakout. Okay, now if we are to get bearish, I have support at 218.5, 217, 215.5, and a fib level at 214. If those levels fail, guys, we are dropping down lower. The mother candle's low is all the way down at 205. That's a ways away. So we even think if coin even wants to go test the bottom of that range, that would be a beautiful move to the downside. Okay, still overall choppy, but that's still a beautiful move to the downside. And we won't get it unless we break down some support levels. 218.5, 217, 215.5, and 214. 214 is a critical fib level. So below that, I'll definitely be bearish and favor we go test 205. And below 205, bears are in control. Here is Doge, still consolidating, trying to figure out what it wants to do. 20 cents, 20 cents. That's support I'm eyeballing. But I will not look to long unless we can get above 23 cents. Above 23 cents, I would look to long. 26, 28, and 30 cents would be targets. Level to level, guys. All right, now we break down that 19 cent, guys. More downside incoming. Berkshire, yeah, nice pullback. Hopefully no one caught FOMO up here. But there was a nice false breakout setup. You know, we broke down 500 and gave us a nice drop to the downside. Right now it's around 497.5, trying to gap up a little bit here. Uncle Chartist has support right now at 497, 495, and 493, with the fib level at 491.6 below. If we break down support levels, those support levels that I've given you, I would be bearish, especially below 491.6. Warren Buffett could be trying to take more profit. The guy's not a fool, all right? And right now there's some greed in his ticker symbol. Look at all that. He might capitalize on it, right? I agree with you, Vav. I agree with you. But for me, price action wise, I need to see those support levels fail. 497, 495, 493, 491.6. Below 491.6, I would be bearish. Okay? Now, next resistance. If we're going to pop back to the upside, you know, the market wants to do what it wants to do. Sometimes it don't want to do nothing. Sometimes it's going to do something, but it's going to do what it wants to do. And if it wants to pop back to the upside, I have resistance at 500, 502, and fib level at 503.8. If those levels recapture or break out, new all-time highs incoming. 505, 507, and I have the next fib extension level all the way up at 511.3. Can it hit? Possibly, but it need to recapture the levels it lost yesterday. Guys, thank you guys so much for watching. This means the world to me. You guys mean the world to me. Remember, we are master traders. We are money magnets. Money, the trading opportunity, it all flows to us abundantly, easily. Remember who you are, and let's kick some market makers ass. Peace.